Hey everyone, this is Dan with Theta Trend. Today is Tuesday, February 16th, 2016. It's about 2:30 p.m. or so Mountain Time. The market's closed about a half hour ago. Well, I'm starting to get a little bit dizzy in this position. We had the Russell up about 2.5% today. We've been adjusting the trade lower and then higher and then lower, and now it looks like maybe higher again. I'm not sure, but the market ended here up 23 points at 995 and change, 2.45% on the RUT. And as you can see here, looking at the daily chart, we've basically come right off of this lower 942-ish level. That was a low here on Thursday of last week. From there, we made a big churn, and we've headed up here to 995, and we're sitting right now in the March CIB right around an upside expiration break even. And an adjustment point as well. And so this level also corresponds with the declining 20-day simple moving average, which is the green line right here. It's starting to level out a little bit, and we have the 10-day starting to tick up even a little bit with this big move higher today. So let's go ahead and drop down to the 65-minute time frame. This is sort of what I've been looking at. And earlier in the trade, we were watching this level up here from 1035 down to about 985, and we saw the market trade out of that down to about 955 or so, come back in, and it was trading within this range essentially. When it fell out of this range, we expected a retest to this low. We got that down to 955, bounced up, found resistance here at 985, and then we broke through. This was our low that we had last Thursday. Down around 942 and change, something like that, right there. And from there, we've basically just reversed and traded higher, higher, higher. And today the market gapped higher and never turned around and just continued higher. So at this point, we've come about 5.7% since Thursday when we made this low down around 942 up to this 996 level is essentially what I'm calling it. And we're into an area here where there might be a little bit of potential resistance around 995. There could also be a little bit of resistance up here, maybe around 998 to 1000. You know, thousands an even number, and frequently we see resistance take place or a little bit of a fight ensue when a market comes to an even number. And at the same time, we almost expect the market to be drawn there, so I wouldn't really be all that surprised to see the Russell continue higher up here to 1,000 or so just because of how close it is to that level. The 5-day moving average is starting to tick up a little bit. We have a higher high here on the 65-minute time frame. We do not have a higher low just yet, but we do have the higher high. So the environment here is sort of sideways with a really wide range. And we've been talking about the wide range for a good portion of this trade, and that theme seems to continue. So one of the reasons, and I haven't adjusted the position just yet, we'll take a look at it in a minute. One of the reasons that I haven't adjusted the position is just that we've seen such big moves that I'm kind of taking my time to make an adjustment. 995 is kind of the area where we start leaving the body of the butterfly, so we're sort of there. In my mind, the likelihood of having a huge catastrophic gap higher tomorrow morning up to like say 1005, even to 1010, something like that, it's probably relatively low. At this point, it certainly could happen. And at the same time, if it was to happen, the position's going to be okay. So that's one of the reasons I'm just taking my time here to make an adjustment. We've been forced throughout the life of this trade to make a lot of adjustments. And so I'm just trying to be patient and let the position work because we're at about 30 days to expiration. The butterflies are going to start to decay more quickly. They are already decaying relatively quickly. And just give the position time to do what it's designed to do. So if we go back over, this is a picture of the trade as of the close today. And I'll just go ahead and show you here. So in IWM, we have the 82 put. This is just sort of a disaster protection put, the 99 and the 100 calls. These are all previous adjustments in the calls there that are stacked up. This 101 at the bottom is a potential adjustment. We'll talk about that in a minute. Down here we have two butterflies centered at 955. They were originally 55 points wide, and on one of them I knocked the upper long down from 1010 to 1005 to cut the upside delta, and I did that on Friday, I believe. Because at the time the market just didn't seem like it wanted to go lower, and as it turns out it wanted to go higher, but we didn't know that at the time. And these are previous butterfly rolls that we've adjusted, and so they're all in there as well. And then we have a couple of potential adjustments down here to talk about in just a minute. So let's go ahead and pull this down and just take a look at the position right now as it sits. For some reason it's not coming down. There we go. So at 995.80, which is where we closed today, we have short delta of about negative 543, gamma's negative 0.03, theta is about $15. Oh, it just changed to $15. Vega's negative 1990, and the open loss is about negative $80, which is that was pretty much where we were on Friday. I think we're at negative $79, and on Friday we were. So let's see, the RUT closed here 25 points, 23 points higher. So the RUT, we came from around here, 970-ish, up to 995 today, and essentially had no change to the P&L. And a good portion of that has to do with the decay of the butterflies. And we also made a little bit of money on the calls today as well, as you might expect. But so there are essentially two adjustments that we have at this point. So one of the adjustments would be or two potential adjustments, I should say. One would be to take off one of these 955 butterflies and move it higher. And the other would be to add a second two butterflies. So the more conservative is obviously the one where we keep our size smaller. And we'll go ahead and take a look at that. So if we were to do that, what we'd want to do is first we would sell out one of the butterflies. And so I've chosen here the 1010, 955, 900. So if we were to sell this one out and then go ahead and buy a 50-point butterfly centered at 975, so you can see I have the 975, 1025, 925, then we're going to be in a position that looks something like this. And I haven't done anything to the calls. But the delta goes to -2, so it's cut in about half. Theta goes to 17, so it's approximately the same. We lose a couple dollars there. I think I have that price locked down. So let's just revisit that. So the delta go to -242, gamma -7. The theta would come off a couple dollars, and the open loss stays the same. The biggest trade-off if we do this, and so again, this is to close one of the 955s and move it to 975. The biggest trade-off is that if the market trades back lower here, we're going to be in a situation, let's say we come to 965 and change. If that was to happen immediately, this shows an open loss on the position of about $60. And if we were to not make that adjustment and we traded down there, we'd have a small open profit of about $50. So we're giving up some of the downside room to run here if we make this adjustment, and that's one of my concerns with that particular adjustment. If we were to go ahead and say, well, we're already in a two butterfly position, what if we add on the upside? Because that's what the standard rule would be, to add a second butterfly once we trade outside of the expiration break even, and really we've slightly traded outside of it here at the close today. If we were to add two butterflies, so I'm going to go ahead and change this to two, so we have two at 975, we'd be in a position that looks like this, but we also need to go ahead and pick up some calls to flatten out the T+0 line. So if we were to pick up a couple of 101 calls here in IWM, we'd been in a situation that looks like this. So our delta is a little bit shorter. It's -855. If we do get that pullback down to 965 that we were talking about, we're looking at a similar open profit. We have the downside room. We don't give that up. If we trade higher, say we trade higher to 1010, this is where the biggest difference would come into play. We'd have an open loss of -215 or so with this adjustment. If we were to go back to the other, we're just going to go move this back to one butterfly, and then again we're going to sell out that one. So we'd have a bigger loss on the upside if we go to the two butterflies and we trade to 1010. So in the single butterfly position, we'd have an open loss at that price of about 120 or so versus 215. So there's about a $200 or a $100 difference there. If the market was to immediately continue higher to 1010. The big difference here is if the market turns around and reverses down to 965. So there is a little bit of ambiguity here, and those are both reasonable choices. And I think probably my ultimate decision is really going to come back to price. And so if price is able to get back up and hold above this 995 level with some sort of conviction, I'm going to be forced to make an adjustment, and the strength with which it's doing that, holding there and pushing higher, will probably influence the adjustment that I choose to make. If it seems like price is just kind of ticking up here and struggling to hold here, I'm going to be more concerned that we're going to see a deeper pullback maybe down here, towards the 10-day simple moving average, the 5-day simple moving average, something like that. If price seems like it wants to gap higher and keep running with a lot of strength, I'm going to be concerned that we're coming up here to test maybe this 1035 level or so. So we'll just see what happens in the morning and see how it plays out. But those are the two adjustments that I'm looking at for tomorrow. I hope that it helps. If you have any questions, feel free to shoot me an email, info@thetatrend.com. Thanks for watching.